Good morning, Valley of the Sun. Thank you for joining me, your host, Nathan Claiborne of the Phoenix Real Estate Roundup. Today is Wednesday, March 1st. I almost said February something. It's not. It's March 1st. It's already March. Can't believe it. First 2 months are down in the history books, so to speak, and we are looking at certainly a different January, February than we saw last year. And in fact, some interesting facts and figures. First, we'll get to the current inventory. There are 14,677 active listings on the MLS this morning. That's a significant drop-off from last week, 15,165 active listings last Wednesday. So, I mean, we're talking, that's 500. That's 500 listings fewer. And inventory continues to be an underreported and under-talked about part of the real estate story. It gets a lot more clicks for everybody who writes about this stuff and talks about this. It gets a lot more clicks to talk about crashes and home price corrections, and that gets everybody interested because everybody wants to buy houses for $90,000 like what happened in 2009. Unfortunately, we have this inventory problem. And this inventory problem is not going away unless we can build several million houses in the next year, which is not going to happen. But it does point to the fact that the builder sentiment that I've talked about the last couple of weeks continues to be high, and houses under contract jumped in January 8% over December. And this market right now is going to be very sensitive to interest rate changes. And this past week, interest rates popped up back closer to 7. They're at 6.85% today on the average 30-year fixed rate. And that is going to take a lot of people out of the market while it's up this high. So I think mortgage application numbers will be very sensitive to up and down ticks in mortgage rates. When they pop up to 6.9 or 6.85 like they are right now, then there's several 100,000 people across the country that can now no longer afford it. But then when it pops back down to 6.25, which it probably will at some point in the next 6 weeks, then we'll get a whole bunch of applications that week. And that's what we're going to kind of see this year. We're going to see an ebb and flow with the interest rate market. It's going to be very sensitive to interest rates. But underlying all of that is the price support that is the inventory picture. The inventory picture is going to continue upward pressure on pricing. Most of the experts that are talking about this are saying that we are probably not going to see prices go up or down this year. And I've said that same thing. It's going to bounce around in the low single digits, either up or down in terms of price appreciation for 2023. We won't see any meaningful price appreciation until 2024, but we also won't see any meaningful price depreciation either. And that is, again, due to the inventory situation. Now, something that's interesting, I think, that's happening in the marketplace is that people are kind of just getting inured or used to, or maybe if you're more cynical, numb to the fact that mortgage interest rates are now going to be above 6%. This is well within the historical channel of where 30-year fixed rate interest mortgages are. Home purchase mortgages have been historically. For 10 years, we had the Fed just absolutely pumping money into the system to support very low interest rates. And that was all, in a way, artificial. So now we're going to actually have a real environment where risk is priced correctly and mortgages are priced correctly and bonds are priced correctly and tradable, et cetera, where we're seeing the market normalize. And we're also seeing our own psychology normalize. We're getting used to it. We're like, okay, I guess I'll pay 6%. That's just what interest rates are now. We're going to wistfully look back on the days of 3% interest rates and just wish that they were here, but they're not. And we still have to move on with our lives and make financial decisions in this current interest rate environment. And paying rent still isn't a great decision. Read my lips. Paying rent is still not a great financial decision in general. I'm not a financial advisor. But real estate remains an investable category, particularly if it's your primary residence, okay? Couple of fun stats, actually just one fun stat. The day after the Super Bowl that was here, 200,000 travelers went through Sky Harbor International Airport. That is an all-time record. This Super Bowl and Barrett-Jackson and the Phoenix Open were very, very, very good to the city, and we're all very, very grateful for that. Thank you, everybody, for visiting. Come back, buy a second home. I'm standing by to help you. And then finally, I owe you the Baller House of the Week. Okay, ladies and gentlemen, this time our Baller House of the Week comes all the way from Silverleaf, and this was closed on February 23rd, so just a few days ago, at $9.9 million. This is up in the Silverleaf development in North Scottsdale, right next part of DC Ranch. Silverleaf is a high concentration of homes just like this. I'm actually surprised this is the first time that it's been the Baller House of the Week up in Silverleaf. We've had a bunch of Paradise Valley, but we have not had Silverleaf until now. This thing is, of course, very large, in line with the rest of them. It's 10,600 square feet, built in 2012. 5 bedrooms, 6 bathrooms. The lot is 82,000 square feet, so not quite 2 acres, 1 3/4, give or take. Up there in Silverleaf, it is brokered on both sides by Silverleaf Realty. They are completely devoted to that particular area. Congratulations to Silverleaf Realty and those agents, and especially the buyers of this magnificent property. 10,600 square feet with the Thompson Peak right behind you. It's really beautiful. Really beautiful. 21376 North 110th Place in Scottsdale is your Baller House of the Week. I want to thank you for joining me here on the Phoenix Real Estate Roundup. I will be back with you next week with the latest housing market news and stats so you can make the best decisions. Thanks again for joining me.